Hey guys, welcome back. In today's video, we are talking about the AMC spikes, SEC discussing fraud, Citadel over leverage, and many more in this video. First, we take a look at this. About the fourth time in a week or so in which we've seen a sudden spike in AMC, followed by slamming the brakes and walking it down. Further evidence of manipulation and desperation. We are in the right fight and the right place. So that's something that we've obviously seen with AMC and something that has been done in the past before. Now, there's obviously reasons for this and is relevant to the reasons of recent events. Now, some of the things we obviously have to understand is that when we do see AMC increasing, there's obviously many reasons. Firstly, we've had very positive earnings that obviously gives us very bullish sentiment. And so it obviously incentivizes people to buy into AMC. Therefore, it increases the buy pressure. Therefore, it obviously increases the price. So that's in terms of what the market sentiment is. Now, there are obviously then ways for them to try and negate that. We've obviously talked about the dark pool. So even though it's a bullish sentiment, even though people are buying AMC, if the orders are rotated into the dark pool and not the lit exchange, then it doesn't matter how many people are buying because that buy pressure is not hitting. So that's when we do see in terms of at first it's hitting the lit exchange. But once they see too many people are buying, they then route the orders into the dark pool. Now, there are, of course, other reasons, such as when we see that some firms who are over leveraged, who are maybe seeing problems with their liquidity, who then don't have that capital to suppress AMC. So they're showing weakness for one period of time. But then afterwards, if they are able to obviously get the margin, if they are able to get the capital, then they go back into suppressing AMC. And so these are, of course, multiple reasons, but the very fact these are happening obviously shows us in terms of the manipulation, it shows the desperation, and again, it's talking about how we are in the right fight. Because if we are able to see people buy into AMC, then already we know that we have won. We know that we're a company that are able to get investors. And if we are able to see that we are making it difficult for the short sellers, we're making them struggle and really have to kind of scrape for these liquidity, then we know that obviously we are winning the fight. Obviously, they are finding difficulties. Now, there's many reasons for this as well, like we've seen in the past. Most brokers like Fidelity, Schwab, and E-Trade sell to stock orders to market makers like Citadel, so they profit and you lose. And so this is the further go on about in terms of, why we see this trade. Now, most people will obviously be long on AMC. Now, there are, of course, people who are both long and short, who are retail investors, and they're trying to potentially day trade or swing trade. Now, payment for order flow is something that we've talked about in the past, and essentially it allows these institutions to have an understanding of course, where you've got in your positions, where your take profits are, where your stop losses are, and with those sort of information, they are able to try and manipulate, or at least they have manipulated the trades for their own benefits. They could try and obviously stop loss people out, and that's how they gain a share price at extremely low price, and that's how they make their money. And so that's what we have to watch out for. And it's also talked about in terms of how we're seeing them really understand where people are buying in. Another reason is obviously you can see this Wedbush, Link, Davidson vertical trading group continue with the 0.0001 per share clown bid on AMC, and then while other funds crowd the sell side with layer spoofs. And so, we've just talked about in terms of payment for order flow. We talked about buyer sentiment. We talked about weakness in short. Another thing is obviously the spoofing. And so when you take a look at everything that's happening for AMC, you understand in terms of why we always see these spikes. And again, multiple reasons for spikes, but one of them is obviously contributing to actually retail investors buying. But then why is it always followed by slamming the brakes and walking it down? Well, when you see that so many things are happening, so many tactics and strategies are used against AMC, then you obviously understand why the price is declining. Now, something that is to be talked about, you can see breaking, the SEC will be having a meeting panel discussion on March 6th regarding retail investor fraud. one can only hope this is about naked shorting. And you can see this. So they're talking about a panel discussion regarding retail investors fraud in America. Now, obviously, don't get your hopes up for this, because whilst we do think, and I personally also think, that the main problem they need to be talking about is, the naked short selling, is the manipulation, is the fraud that has been done on the retail investors. And I think that is the most important problem they should really be tackling. They should really be discussing and trying to solve. They obviously haven't done to the best of their abilities. And one could argue, they've done very, very minimal. And so, what we do have is obviously, like we talked about in the past, we have seen some sort of rules where it has restricted, of course, short sellers. But to most extent, we haven't seen them do anything to really try and eliminate it. And so, depending on what this discussion is, depending on what sort of results we can get from it, we could be looking at something to do with naked short selling, or we could get something completely different. I want to quickly mention it, but like I said, it's nothing to get your hopes up, but it is something that, if obviously they are talking about it, then it's something that's obviously very, very good. Now, let's take a look at this. Citadel Securities pledged, rehypothecated 147.81% of the securities collaterals received in 2024 for repurchase agreements. And so their overpledging of received collaterals was likely due to over-collateralization, where Citadel can pledge more collaterals, providing security to counterparties, reducing credit risk, fluctuations in market value, or margin requirements. So this is something that we have already seen and we were obviously expecting, because one of the things that we've talked about was how Citadel are not in a positions where they are healthy with their capital. Despite what their earnings, despite what their fundamentals are showing, we've seen plenty of signs where they are lacking in liquidity, where they're lacking in capital. And now this isn't just me saying this, but this is from what we have seen in the past. For example, Citadel, despite boasting a big profit that they've made, we've actually seen them take up more and more loans during the last few years. But more importantly, whilst they've claimed that they've obviously made billions of dollars, recently we obviously saw them having to sell bonds in order to raise cash in order to pay back their investors. And so if they were in a position where they've made billions of dollars, why do they still need to raise cash? Well, you can see obviously margin requirement is a big thing, and of course over collateralization. And so we know that they are in the positions where they have more liabilities than they have assets. And so this is why, firms like Citadel, short sellers of AMC, are always panicking and stressed out about AMC and GME, because they haven't put themselves in a position where if AMC were to go up, they're able to get out of this, maybe hurting a bit, but still able to get out. No, the problem is that they're in the positions where the moment AMC starts going up, they are in a position where all of their existing positions have to be covered in order to pay back for their AMC positions, in order to pay back for their GME positions. And it's to understand that they are obviously using more leverage, they're using more liabilities than they have assets. And that's obviously a risky, very risky investment. And so that's why they are worried. And you can see another thing, and this could potentially be linked to Citadel, but it's obviously overall as well. So it's the temporary exemptive relief. And this is what we talked about. So they obviously had to do this, and multiple reasons. So you can see the margin separation requirement. And so this is obviously for the treasury securities. And this is something we talked about in yesterday's video. But the reason why I mentioned this again is because in our past videos, we talked about how Citadel is obviously in the treasury market, and they are actually a very big participant. And now we just talked about how they are over leveraged. They've rehypothecated 147.81% of the securities. And now we're also seeing how they're granting temporary exemptive relief to the treasury clearings. And so you can see the link in between. And this is what we talked about with understanding how we're seeing these shorts, how we're seeing these institutions who are over leveraged And then we're also seeing these rules that are implemented to obviously benefit them, or at the very least, to try and get them out of the situation they put themselves into. So again, like I said, this isn't just me saying it. These are facts that we are seeing that are obviously showing us the indications of what's happening. But yeah, guys, thanks for watching this video. I'll catch you guys next time.